just joined. Thank you for joining, Vero. And her audio is getting connected. Oh, we got Fadi coming in. Ooh. All right, we're getting a little rush. I don't think Vero has her audio connected. All right, so the clock has struck 7:05. It's time for us to get started. Welcome everybody to the first time homebuyer seminar. Thank you so much for coming. You should be proud of yourself. You're taking the first step towards home ownership and building generational wealth that you'll be able to pass down to your kids. First things first, whatever you do, stop right now, get a pen and a paper or something to take notes on, because you're probably gonna have questions come up throughout this process. As these questions come up, I suggest you write them down. And then at the end of this presentation, we are going to do a Q&A. Myself and the realtor here, Nancy, are going to be available to answer any questions that you guys have. So it'll be like a live chat back and forth. You guys will have your mics unmuted and be able to talk with us. Now, if you do stay till the end, we're gonna have a little raffle. I'm gonna enter everybody's names, and the winner is gonna get an Amazon gift card. And anything you need in life, you're gonna be able to find on Amazon. So it's gonna be worth sticking around. So get out a pen and paper, be ready to take notes, and let's get started. First, I wanna tell you about myself. I am the lender. Nancy is the realtor. Lender and the realtor work together to get you guys your first home. Why would you want to work with me? Well, first of all, I am a wholesale broker. I work for Pacific Wholesale Mortgage. We have access to every sort of loan you could ever imagine. And we're not loyal to any one loan servicer or lender. We have access to all of them. We service lots and lots of people, 70 to 80 families a month work with us, and we're able to help them get into a home throughout a few states in the United States. We have access to over 500 different loan programs, lots and lots of programs, from getting people into $2 million, $3 million homes with jumbo loans, all the way to getting people into homes who have a 550 credit score and don't have a lot of money to put down. Everything in between. We work with veterans. We work with school teachers who have certain programs for them. We work with all sorts of people. I specialize in working with first-time home buyers, people who are getting into their first home, people who are ready to fire their landlord and start building equity in their own home and paying their own mortgage each month instead of the landlord's mortgage. I'm also available at all times, available at nights, weekends, holidays, from the second I get up in the morning, around 5:30 a.m. to any time I go to sleep. I'm available for you guys to call me. I'm very blessed to have a job where I don't need much. I need a cell phone, I need a computer, and I need a hotspot. No matter where I go, I have 2 computers and a hotspot and my cell phone. So if you call me up any time of day, whether it's 4th of July, Halloween, I'm gonna be there. I don't take a day off, unlike a bank, which is closed actually a lot of the time and not available. So anytime you call me, I'm gonna be there. Next is Nancy.
Hi guys. Thanks, Sean. My name is Nancy Wanes. I am a realtor out here in the Inland Empire. The Inland Empire does not hold me. I have gone out to the LA County. I have gone out to Orange County. You need me and I'm there. I've been blessed enough to be distinguished as Best of Zillow for the past 2 years. Recently been named one of the top 10 agents here at Keller Williams. PowerHouse Realty and Keller Williams have been partnered up together for the past 2 years, I would say, and it's been going great. We've been able to service at least 750 families just this year. So we've been blessed. Our team and I were big on basically fighting for our clients. Our clients, as soon as, we all work together, we're not clients anymore. You guys are family. And, we fight for our family and we negotiate for you guys. So we're tenacious. We make sure that you are never, ever put in a situation that you're financially not happy with and your whole heart is not fully in it. So we're lions for you, basically. So we'd love to be able to work with you guys and help you guys out, and along with Sean and his team. So we're ready to help out.
Cool. So now that we've bragged about ourselves a little bit, which we both love doing, let's talk about you guys. You guys are first-time home buyers. This is why you're here. You're here to learn about what it takes to be a first-time home buyer. And in order to be a first-time home buyer, there's a few steps you have to go through. Now, everyone's going to have to go through these. And the first one is very, very easy to do. All right. And that first one is to schedule a mortgage planning session with a loan officer. Myself, I'm the loan officer. And that is where we are going to have a talk. We are going to have a one-on-one conversation. It's very non-committal. We're not going to check your credit. We're not going to, there's no cost, there's no fee. It's completely free. And it's just a casual conversation about your current financial state. We'll see where you're at. If that goes well, then we move on to step 2, which is getting you pre-approved for a mortgage loan. Getting pre-approved for a mortgage loan is very, very important. All it really takes is for you to send me a few documents. If I need more, I call you, I say, hey, I need a few more of these. I need this, and you say, all right, I got it. I'm going to get it to you in the next day or 2 days. I say, all right, great. Hang up the phone and we move on. Now, once we've got you pre-approved, that's when you're able to go to step 3, which is where Nancy comes in as the realtor, and that is to find your new home. And I'll let her explain that process.
So I take care of the fun part. Once Sean pretty much gets us that pre-approval letter and makes sure that we're financially ready, we know our payment, we know that the bank and you guys are all set to go, we sit down and have a buyer's consultation. I want to know what you're looking for. What do you love about where you live now, and what can you change? You're buying a home. It's not the smallest purchase in the world. It's not something like you can return like a car and bring it back if you change your mind. I want you guys to always be comfortable with the purchase you're making and the decisions that you make. At the end of the day, I say this to everyone, I'm a consultant. I consult and you decide. And that's the biggest thing, is I'll always give my honest opinion. And especially when I go shopping, I always say we, because I'm looking for you, and who doesn't love shopping? Number 4, once we go shopping and we find homes, we're going to end up submitting offers. We might get the first one accepted if our pre-approval letter is written by Sean, and because we know it's amazing, and we negotiate terms. I will get into all of that when we have our buyer's consultation. We're going to talk about what goes into an offer, what all of that means, and make sure that you know exactly what you're signing. Again, disclosure is everything. Once we find you that home, we write that offer, we negotiate the terms, and us and the sellers all agree on what we all want. We go under contract. That means we open escrow. When we open escrow, a lot of moving parts happen, but at the end of the day, it's all simultaneous. So that way it's all happening at the same time. Sean's dealing with the loan, which he's going to get into in just a bit. And then I'm doing inspections with you guys, making sure disclosures, and the seller has told us everything about the house. And in that time, Sean's going to be ordering appraisal and doing the final loan approval, which he's going to get into.
All right. So step number 6 is something that's going on in the background as you're going through steps 3, 4, and 5. And so that's loan approval. Now, loan approval could take 30 days. It could take 12 days. How long does it take? Well, that depends on a few things. Really what it depends on is the relationship between you and me, and making sure that there's clear communication. And so let's say I ask you for a document and you say, hey, I can get you that. It's going to take 2 or 3 days. That's fine. But that means closing is going to take 2 or 3 days longer. But if I say, hey, I need this document from you, and you say, all right, I'll get it to you in the next 2 to 3 hours, and then you do, which is ideal, then we can probably close sooner, maybe 12 days. And so that gets us to loan approval. And then the last step is the step where you end up with the keys, and that's closing day. And that's where me and Nancy are there, and she will talk about that and what goes on there.
It's pretty much wrapping everything up, right? So we've gotten loan approval, we've signed our loan docs, and we've done the final walkthrough of the house to make sure it's in the same condition as it was when we first saw it. We close escrow, I give keys, we pop a bottle, and we have a bunch of awesome food, and we celebrate. So it's fun. It's going to be great.
All right, cool. So now that you know the first 7 steps, we're going to go over the 5 mistakes you might make going along those 7 steps if you were to work with a team. that was not comprised of myself and Nancy. But now that you're working with us, or when you work with us, you're not going to make these mistakes, and they can add up to quite a bit. So the first mistake is the one that I am very passionate about. This is why I love working with first-time home buyers, and that is the first-time home buyer incentive programs. These are a group of programs that the government has to basically give you money to help you buy your first home. The government wants you to do certain things, and they give you money for those things. They don't want you to do other things, and so they tax you for those things. They don't want you to drink and smoke, so they tax alcohol and cigarettes. But they do want you to buy a home, and so they'll give out money for you to do that. So what is a first-time homebuyer grant? First-time homebuyer grant, it's specific to your region. California has various ones, and it's dependent on your income. Okay, so you can't have too high of an income and still get them, but those limits are very high. And it is a forgivable second mortgage. It's basically you have the first mortgage to pay for 97% of the home, and then you have this second mortgage to pay for the other 3%. And it's down payment assistance. That's that 3% to help you pay for the down payment and get you into the home with very little money out of your pocket in the first place. So what is the number one first-time homebuyer grant? It's called CalHFA, CalHFA, and it is a program called My Home, and it offers deferred payment junior loan or secondary loans to pay for the down payment on a house. If you're getting an FHA loan, they'll give you up to 3.5% of the loan or of the purchase price of the home to pay for the down payment. If it's a USDA or conventional loan, they'll give you up to 3% of the purchase price. There is a cap though, and it's $15,000. So they'll give you up to $15,000, which is a lot. If it's a VA loan, which you got because you're a veteran and you're entitled to certain benefits, such as a VA loan, which is a great loan, we'll talk about that later, you get up to 3%, but there's no dollar amount cap. So that 3% could be, $20,000, and you get all 20,000 of those to pay for your down payment. However, if you are a teacher, or if you are an administrator, or even if you're a secretary in a school, that $15,000 cap doesn't apply. If you're a member of the fire department, the $15,000 cap doesn't apply. If you're purchasing new construction, which there's a lot of new construction in this area, then the $15,000 cap doesn't apply. If you're buying a manufactured home or a home with an ADU, then this $15,000 cap doesn't apply. So great, amazing way to get your down payment taken care of. Down payment is a very scary part of buying a new home. When you're looking into the numbers, you say, well, I don't know if I have all that saved up. Well, guess what? You don't have to have it all saved up, because there are these programs available to help you. In addition to CalHFA, there is another sort of program. This one is a grant. It is not a loan. It is a gift from the government of California, and it doesn't have to be paid back. Look at that second line there. This is a gift that does not have to be paid back after 3 years. For 3 years, it is added to your loan amount. After the third year, poof, it's gone. And it's financial assistance up to 5% to use for the down payment, but not just the down payment, all the other closing costs. You got appraisal, you got inspections. There's various things that you don't think about that actually get tagged on to the price or to the money that you have to pay for purchasing a home. You can get a lot of money for that from this program, full 5%. You actually don't even have to be a first-time home buyer to qualify. And there's very flexible income limits. Basically, if your household makes under $162,000 a year on some loans, not all of them, some have no limits, but if you make under $162,000 a year, then you qualify, which is great. Here's an example. So let's say we got Anita. Anita wants to buy a home for $200,000 as the home. The minimum down payment, let's say she has an FHA loan, is 3.5%. So that means she has to pay, at this point in the process, she has to pay $7,000 out of her own pocket as the down payment. And so the first loan is worth $193,000. That pays for most of the home. She has to pull $7,000 out of her pocket. And then FHA has a mortgage insurance cost of $3,377.50. So CalHFA, that first program we just talked about, that can cover her $7,000. But she still has this $3,377.50 mortgage insurance she has to pay. Well, that would come out of her pocket if she was working with a lender that wasn't aware of these programs, and a lot of them aren't. I am, and so I would say, hey, guess what, Anita? We have this GSFA Platinum grant that's going to be able to get you into a home, or get you 5% of the home value in cash to use for the closing costs of this home. And if the closing costs include this $3,000, $3,377.50 mortgage insurance, we can pay that. And we're still going to have $6,000 left. Where do I get this? I get this from, if the house is 200,000 bucks, 5% of that is 10. And we take out that 3,000 from the mortgage insurance, she still has $6,622 left to pay for the home inspection, to pay for the origination costs, to pay for the appraisal, and anything else that comes up in that process. And so Anita can get into that home for very little out of pocket, possibly nothing out of pocket. And if she qualifies for this various programs, she should use them. And a lot of people go out and they buy homes and they totally qualify for these programs, and they don't use them because their lender didn't make them aware of them. They didn't do their research, which is not their fault. That's their lender's job to do that research. And so they end up putting more money down into this house than they actually needed to. And you're going to avoid that when you work with us. So what are the types of mortgages? Just so you guys have a little information about this. There's 4 main types. The first one is conventional. Lots of different conventional loans out there. And you have to put some money down, only 3%, but you need a little bit higher of a credit score, about 620. That's the minimum. Now, FHA is the second type, and you don't have to put much money down, or you don't have to put that much money down, 3.5%, but your credit score doesn't need to be that high. It only needs to be 100 or above 580. And if you're willing to put 10% down, it can be all the way down to 500, credit score of 500 with the FHA. Now, the USDA loans, they're affordable, they're government-backed loans in defined rural areas that are not super populated, which you'd be surprised. There's some pretty nice places that are considered rural areas, and you can get these loans for 0% down. You don't have to put any money down, but you do need a credit score of 620, which I think a lot of you guys will probably have. Whoa, I'm so sorry about that. All right. And then the last loan is the VA loan. What is a VA loan? A VA loan is a certain type of loan that veterans qualify for, whether they have already left the military or the active duty military. It is a 0% down payment loan, and you only need a 580 credit score. So it's easy to qualify for. You don't need to put a lot of money down. And this is an entitlement that if you served in the military, you are completely entitled to. This is a benefit. You should take advantage of. This is something that you have worked for, you've earned it, and it's there for you. And we encourage you to use it. So, sorry about this. This is not.
Do we get to talk about us again?
There we are. Yeah. No. So we just covered these. Now, what are the USDA rural areas? Just so you know, this may not apply to you. If you're looking into Temescal Valley, you can get a USDA rural area loan. There's new housing developments there. Winchester, there's new housing developments there. But as far as the government's concerned, those are rural areas, and you can get a really good loan. So if that's something you're interested in, there's new developments in Winchester and Temescal, and they qualify for USDA loans because they're in a rural area, even though they're really not. What is a DTI? DTI is something that helps determine whether or not you are going to be approved for a loan. And it's very simple, seems daunting, but it's just a percentage. It's your debt, how much you owe in debt a month, divided by your income, how much you make. So let's say you have $1,000 worth, you have a car loan and a little bit of student loans and some credit card debt, but you make $4,000 a month. That $1,000 debt divided by $4,000 income, that's 25%. So that'd be a 25% DTI. And if your DTI is below 45%, that's pretty good, and you're going to get a loan pretty dang easily. What is going on? All right, pretty easily. So what is an FHA loan? An FHA loan is something from the federal government created to help get people into homes in the easiest way possible. It was created a long time ago, post-Great Depression, to get people into homes, and it's worked. And many people have used it since then, and is a thriving program and is one of the best ways to buy your first home. Low 3.5% down payment with a 580 credit score. Like I said, you only need a 500 credit score if you're willing to put 10% down. There's very easy refinancing. Let's say rates go down, you can refinance easily. Low mortgage rate. So as far as the interest rate, it can be very, very low, and I can make sure you do get that low interest rate. Higher DTI. We just talked about DTI. You can have a little more debt and still get into one of these homes. And they offer 15-year loans, 30-year loans. The seller, the person you're buying the house from, they can actually pay for some of your closing costs up to 6%. And then there's also down payment assistance programs or grants that are accepted with these loans. Comparing FHA to conventional loans, you'll see on this left-hand column, you need 3%, but you need a little higher credit score. Your maximum debt to income ratio is a little lower. Remember, if you're below 45, you're probably pretty good. Maybe you don't do conventional because you're at 45, you go with FHA. The loan limits for this year and next year are $625,000, so they're a little higher. Those are recent changes. And FHA has a little bit lower of a loan limit, so you can't buy as big of a home, but you can buy a pretty big home for 477 around here, depending on where you're looking. All right, and then there's no income limits. That's a great thing. You can make as much money as you want, and they're still going to give you the loan. And then the out-of-pocket contribution, 3%, 3.5%. But if you use those programs we talked about, you might not have to pull anything out of your pocket to get into these homes. So now we're going to talk about what you can use for down payment and what you can't use for down payment and closing costs. One thing you can use is 401k or retirement accounts. If you've been putting money in a 401k, working hard at your job, then you can use statements from those to help pay for the down payment. You can use funds from those. You can get gifts. If you got an uncle that says, hey, you're wanting to buy a new home, I'm going to give you $10,000. Let's get you a new home. That's great. We can accept those. We will need a financial statement from your uncle about how he got that money. And he only has to have had it in the bank for 2 months. So not necessarily where he got it, just that it was in the bank for 2 months. And then stocks, bonds, cash that's in the bank, that's great. We will need financial statements about those. What you cannot use for down payment, what you cannot use for closing costs are a credit card. You can't just max out your credit card in order to get into a home. You can't get a personal loan from upstart.com or whatever to help pay for the down payment or the closing costs. And you can't use undocumented cash that's sitting under your mattress right now. What you can do, and a lot of people do have cash in the home, that's totally fine. I've got cash in my home. What you can do with that cash, as long as you take it, put it in the bank, and it's sitting in the bank for 2 months, then doesn't matter where it came from. We just know it's been in the bank for 2 months. We got 2 months of bank statements showing that amount, shows you're good, all right? And later you can take that out. You don't have to keep that in there the rest of your life. But just we need 2 months of that cash inside the bank and you're all good. We don't need to know where it came from. We just need to know that it was in the bank for 2 months leading up to loan approval. All right. That was mistake number one. That was a very long one. The rest of them are going to be a little bit shorter. But the first one, very important. All right. Take advantage of those programs. Make sure you get a good loan. Understand the loan. Work with your lender, someone like me who's going to explain to you how those loans work so you know what you're getting into. Now, mistake number two is not getting the pre-approval ahead of time. All right. And Nancy's going to be talking about that first.
All right, guys. So getting pre-approved, it's probably the most intimidating step of the home buying process. You know, you're talking about, am I going to get pre-approved or not? It is also the most important step. The good thing about our team is, you know, we've seen pretty much every possible case. So with that being said, it being the most important step, we want to make sure that we come out with our best foot forward to the sellers. As much as I love seeing homes for $900,000 and $1 million and $500,000, all these different types of beautiful homes, and you're going to love them too. I'm sure there's some beautiful homes out there. Let's say we don't have a pre-approval letter. We're just kind of skimming the market. We're doing some window shopping and we find one and we come back to Sean and say, hey, we want this one. And we're excited. And then Sean says, your mortgage is $6,000 a month. You're not going to like Sean. I'm not going to like Sean, and no one's going to like me because I showed the house. So with that being said, the first things first is actually knowing the situation that you're walking into financially for yourself. Is you want to be confident when you walk into a house. Yes, I can afford it. I know how much I'm paying per month. That's the most important thing, hands down. We're not paying that mortgage. You're going to be paying it. So at the end of the day, it's your comfortability. Second is I've seen this constantly. Again, I consult and I tell everybody it's always important to get pre-approved first, because you never know when you're going to come across that home, that one home that really just, it fills your heart and you know that that's yours. And then we see it, and then the sellers are reviewing offers and we don't have that time, to go to Sean and say, hey, get me that pre-approval letter. Now, Sean works fast. Don't get me wrong. And I say this from personal experience. Sean works quick, but we want to make sure that we've dotted the I's, crossed the T's. And by that time, if I call the agent and I say, hey, where are we at with offers? And she tells me, oh, well, sorry, there's not much we can do. So it just makes more sense in the long run to get pre-approved first. And I say that wholeheartedly and I stand by it.
Yeah, very important. Very important. Well, so what does that look like? What does the pre-approval process look like? So there's 3 things that go into your pre-approval. 1 is your credit and your credit score. And we can work with low credit scores. We definitely can. 2 is your income. What is your income? How long have you been getting it? Is it from a job you've had for a month or a job you've had for 5 years? And then down payment. How much money do you have? How much cash do you have in the bank or wherever to put into this home? So it helps you determine how much you can afford to spend on a home. Once we figure out through your credit, your income, and your assets, or whatever you have to put into the down payment, once we factor all those in, we can say, hey, guess what? You can go shopping for homes between 500 and 600,000 easy. You can go shopping for homes between 350 and 425,000 easy. That's what you should be going after. So when you do go shopping, you know what you can afford and you know what you're looking for. So when you find it, you're going to be able to get it. And maybe you might qualify for a bigger loan than you really realize. Maybe you're underselling yourself. You're looking at $200,000, $300,000 homes. We do the pre-qual and we find out, hey, guess what? You can definitely afford a $500,000 home. Don't sell yourself short. And so then you go look for those. Pre-qualification, as Nancy talked about, can determine what house you qualify for and increase your bargaining power negotiating with the seller. You're showing up and you're saying, hey, guess what? I want to buy this home. Here's a letter from Sean, my lender, that says I can afford this home. And instantly you are in a favorable position with the seller. You're going to be able to close quick. They're going to look at your offer and say, hey, I take this seriously because this person's ready to go. He's not saying, showing up in a fancy car he rented saying, hey, no, I'm going to be able to afford this. He's got actual proof from a lender that says I can afford this home. And as soon as they know that and they like you and they say, we want to sell the home to this person, that's when you can go under contract and get stuff rolling and get into your new home. And the other part of pre-qualification, we find out which loan product fits your needs. Is an FHA loan good for you? Are you looking at a certain spot where a USDA loan would be better for you? Did you serve in the military? So a VA loan is perfect for you. And then we can also find out, what is this monthly expense going to be? Is it going to be more than my rent I'm paying now, or is it going to be less than my rent I'm paying now? In a lot of cases, it can be less than the rent you're paying now, especially if you're the head of household of a family renting. So that loan pre-qualification is very important. If you start looking for homes without doing that first, you're making a big mistake, and that can cost you the home that you fall in love with, that first one that's perfect, but you don't get it because you weren't pre-qualified. Things you do want to do during the pre-qualification, things you don't want to do. Things you do want to do, call us if you have any questions. Like I said, I'm available all hours. You can call me anytime. I will pick up the phone. I'm blessed to have the job where I can do it from just about anywhere. I don't go anywhere without my hotspot and my laptop. Ask me if you have any questions. Continue to live at your current residence. Don't just move in the middle of this process. Continue paying on your mortgage and rent like you normally would. Continue using your credit card as normal. Keep working with your current employer. Don't be changing jobs. Keep your same insurance company. Stay up to date on all your accounts. Keep paying off those. And then expect requests from me for additional documentation. So I might reach out and say, hey, I need this extra piece of paper from your bank. And you log into your bank, you grab that document, you save it as a PDF, email it to me, boom, we're good, we're moving along. Things you don't want to do. You don't want to make large purchases. All right, so you're excited to buy this new home. We're in the process, you've picked it out, you're dealing with the seller, and you're all excited, and you're like, you know what? I've always wanted a suede leather couch. And I'm you know what? I'm gonna go out and buy it right now. And you log on to overstock.com and that's the one, boom. And you're celebrating. We got a house. We're in the process of getting a house. We got that couch we always wanted. Let's buy another piece. And you start going crazy and buying the furniture for your new home. And I do think you should buy furniture for your new home, but you're going to need to do that after, because we can't see a bunch of big charges on your credit card that are out of the norm. Because once we start seeing charges that are out of the norm, the lender, the underwriter gets a little scared and like, wait, what's going on here? And it slows the whole process down. So don't change any bank accounts. Don't make any large cash deposits. We don't want to see cash coming in from somewhere that we don't know where it's from. You do that 2 months in the past, we don't have a problem, but don't do it while we're in the process. Don't close any credit card accounts. Don't transfer any balances. Don't consolidate your debt into 1 or 2 credit cards. Don't apply for any new credit. Don't go out and celebrate, we're getting into this home, I'm going to buy a new car. I encourage you to buy a new car. You probably deserve a new car if you're buying a new home, but do that after we are in the home. After you get the keys to the home, then you can get the keys to the BMW, but not before, because if you're taking out new credit, that changes your credit profile, that changes the picture of your financial life, and it makes it so the whole loan slows down or even falls apart. And then definitely do not max out or overcharge your credit card accounts.
If I can add to that really quick,
Mm-hmm.
co-signing counts also as buying a car. So your second cousin's dog's brother or whatever wants to buy a car and says, hey, Sally, just slap your name on it. That counts as you bought a car. And that's, again, going back to disclosure to your lender and your agent. Hey, just FYI, I co-signed on it. It's not mine, but technically it is. So food for thought.
Gotcha. Very good. And then mistake number 3, which is working with a large bank instead of your personal broker. And Nancy's going to carry this one.
Yeah, I wanted to touch on this one. I am not a lender, but I do have a loan background. Sean is the expert here when it comes to loans and stuff, but I wanted to touch on this real estate wise and loan wise. When with the big bank, we're talking Chase, Wells Fargo, Citibank, Union Bank, all of these guys. We're talking corporate here. We're talking multi-franchises all over. And I don't know about you, but I like when I'm buying anything, from a car to furniture to anything, I like working with the person in charge, because they're the ones that make the decisions, so they're the ones that can get me a deal. And that's pretty much most of the time what we're looking for. When you're dealing with people like Chase, and I'm a Chase banker, but they do not hold my mortgage. Okay. I have to talk to Joe, to talk to Jerry, to talk to John, to talk to whoever still starts with a J, to finally get me the answer that I need to get, to tell me yes or no. Versus when I'm working with someone like Sean, who is a direct broker, he is almost the bank. So when I tell Sean, hey, this is what I want, this is the payment I'm comfortable with, make it happen, Sean has the resources to basically make it happen. So with the bigger banks, another thing too, Sean works as a broker. He has multiple banks under his wing in order to make sure he finds the program that fits what you're looking for, which means Sean doesn't get paid based on the rate that he gives you. So the higher the rate, the higher he gets paid. It doesn't work like that. And that's the beauty of it, is who's on my team, right? That's the biggest thing, is who's on my team and who's working with me. He's working with you directly. Now with, again, the bigger banks, they have very cookie cutter programs. They do not have FHA. They do not have any of these programs that pretty much help you with your down payment and your closing costs. Again, cookie cutter. And of course, not everyone fits that cookie cutter thing. So it's almost like you're cutting yourself out of the crop, and it's not fair. Now that's from the loan side. From the real estate side, real estate is almost a 24/7 job. People always say, when do you have a day off? I'm like, I don't take days off. I take hours off, because that's just what it is. You know, I've had times where I'm on the phone at 11 o'clock at night with clients, and there's a question that they have on their loan that pertains to their offer. I can't answer. I don't have their loan file. So you need people like Sean, like a direct lender, where I can call them at 11 o'clock at night and say, hey, Sean, what is going on with this? I need to know in order to write this offer, and he will answer. Versus, again, the bigger banks, and it is deal killing. You're probably like, well, why don't you just wait till the morning? Time is of the essence in real estate. I can definitely tell you that. I can't wait till 9, 10 o'clock in the morning for John to wake up, to clock in and punch in and to chase, and then finally sit at his computer and open it up with his coffee. I need someone that's going to be there with me, because when I work late hours, we work late hours. So, and vice versa. So that's why it's super important. I've had lenders kill deals, unfortunately, and thankfully Sean is not one of them. So, because he understands and he gets it. So have people on your team that you know are going to vouch for you.
Yeah, and the other part of it is, you know, one of the benefits that we're talking about, and one of the benefits you're going to get from coming to this webinar, is there are down payment assistance programs that are out there for you to help you get into your first home. And these banks are not going to offer those because they don't want to anyway be involved with them. It makes less money for them. And my money doesn't come from whether or not you paid a high down payment or this, that, or the other. The people at the bank, their boss is the bank. Me, my boss is you. All right. I only do well when you do well. And so if we can get you into a home with a down payment assistance program, as the government wants you to use, then we'll be able to do that. If you go to a big bank, they're not going to offer that. If you bring it up, they're going to say no. And they're not going to say no right away. They're going to use your time passing along your file for days, 2 weeks, 3 weeks plus, before they turn around and say, hey, you know what? We can't do it. And you're going to say, well, what have I been waiting for? And they're going to say, well, move on. If something doesn't work when you're working with me, if a loan doesn't go through when you're working with me, we're going to be able to adjust and gather ourselves and go for a different program. There's always something we could do. There's always a program we can fit you in. And I'm not going to go down the path of fitting you or going after a program that I don't already know you're going to fit in. At a bank, they'll take anyone's application and waste their time for 2 weeks before they tell them no. Okay. Because they've only got a few programs and they're going to run you through those, even if you don't qualify. So next is mistake number 4 of 6, and that is buying directly from a builder, which Nancy is going to cover. That is her strong suit.
Thank you. Buying from the builder, right? What does that mean to people who don't know? That basically means you're buying a house that is brand stinking new. You're probably, if it's not built yet, you're probably then buying the land and the plans that the builder is doing in order to make it happen. Now, going back to my statement just not even 2 minutes ago about I like working with the people directly that can make decisions, a lot of times people think it's the same thing when it comes to builders. It is the polar opposite when it comes to buying a new home. The reason for that is because the builder is actually the seller as well. So you're not only dealing with the person that made the house, you are dealing with the person that is also selling it. So in that case, how would you feel if you walked into a house and the seller represented you? There's no agent, there's no real estate professional on the seller side. The seller is representing you. Do you think they're going to have your best interest at heart, or are they going to do the best they can to milk as much money as they can and to make sure that the terms that are in contract with you, because they're telling you all the fluff and pretty stuff. And it's not going to work. It's not going to make sense. At the end of the day, you need someone that's going to represent you. And I say this wholeheartedly because a lot of times we're able to, as realtors, we're able to negotiate, hey, do they offer appliances to you guys? Are we able to throw in a washer, dryer, and fridge in there? A lot of times we can say, hey, that closing statement doesn't look right? Because again, the builder is going to do everything they can to make sure you as the buyer work with their team. And I'll give you a great example. This was a previous client that I've had where the builder basically said, hey, we'll give you $7,000 if you use our lender. And they didn't say it directly because legally they can't, but they said, hey, work with us directly. So basically don't have me included in it. And at the end of the day, all I can do is consult and you guys decide. And I said, it is your decision. I think you are not making a very good decision. And they felt that it was. So this client went along with the builder and the lender. And they did get the $7,000, but their mortgage was almost half of what it was that they wanted, more than what they wanted, if that makes sense. That $7,000 did almost nothing to it, where they ended up having to cancel because of course no one was advocating for them. No one wanted their best financial standing for it. Again, guys, it is a house. This is not something small. And if you're going to have people in your corner that are not doing what's best for you, it's just not going to work. So again, there's sales agents at the offices. I always tell people before you go, let me know that you're going and I will meet you there. We will sign in together. We will go see as many phases as you want, floor plans, and I can go to design studio with you so you guys can design your home. New builds are really fun. I just always suggest bring someone with you that already knows the game and the playing field that they're already going to bring you into. So that's my 2 cents on it.
Yeah, and so buying new construction, great. Buy new construction. I live in new construction, but buying directly from them without having someone on your side, making sure that the builder isn't putting things in the contract that's costing you more money, that's a big mistake because they'll say, hey, we're going to give you $7,000 towards closing costs, but then they write in the contract some extra fee that's $14,000, and so they really made $7,000 off you. They gave you 7, but they charged you an extra 14. And so if you work directly with the builder, you don't have someone on your side. Work with Nancy; she'll be on your side.
Contracts are what we do all the time, guys. You know, I deal with contracts, multiple different types of contracts and different scenarios. So, you know, that little bit of legalese that our eye just kind of glanced over by accident, that one little sentence could make or break a lot of things. And again, I've seen it go south and it's not fun, and I've helped clients out, but at the end of the day, if you're too deep, there's things that I can't even do. So that's that. Skipping a home inspection. I don't think anyone here would buy a car before trying it, driving it, checking it. I always tell people a home inspection is super important. The reason for that is the seller could tell you everything. They could be just an honest Abe the entire transaction. But sometimes when you're living in a home and you've been there for a long time, there's things that sometimes you unintentionally neglect, or there's things that you're like, you know what, I didn't notice that stain in the ceiling. Did you notice that, honey? And a lot of times they won't. So that's why a home inspector is there. He checks the ceiling to the foundation, inside and out. He checks everything from the plumbing to the HVAC system to high voltage, low voltage electricity, you name it. And the beauty of that is that you know exactly what you're walking into. That can cost quite a bit. You know, I have a great team of inspectors that have helped me out, and they're honest with me and they tell me, like, Nance, this is going to cost a lot. I think your client needs to back out of this home, because at the end of the day, if it's going to cost us $30,000 and it's a big plumbing problem and the seller isn't able to help, it is going to be detrimental if the funds, you didn't know about it and the funds aren't there when you close. So that's why I always say you need to know inside and out of the home before going in and buying it. It's just like dating, right? You're not going to go and marry someone if you don't know every detail about them. Some people do, but hey, I mean, kudos to you. But nonetheless, this is financial. So this is the most important thing. Again, this is a massive purchase. And again, key thing, know what you're buying, know what you're walking into.
Yeah, and sellers will try and strong arm you into skipping the home inspection. They'll say, well, we could give this to someone else who does want to skip the home inspection. And if that's the case, give it to them. Because if a seller is not confident in the home such that they're willing to lose a good offer on it just to skip an inspection, well, then something's probably wrong with that home. And if you skip an inspection, you're not going to find out until you've already bought it. And there can be, problems with the house that could be way higher than $20,000. If there's problems with the foundation of the home, massive cracks that are like not earthquake safe and all that stuff, you could have to lift the home on stilts to fix it. All sorts of crazy things that you wouldn't think are even possible until you saw a construction crew do it, just to fix that home. In which case you might have to just sell it at a loss, which could cost you a lot of money and start this whole process over. So definitely do not skip a home inspection. If a seller is asking you to, walk away from that. So mistake number 6, choosing the wrong team. This could cost you a lot. We talked about, buying directly from the builder. That's choosing the wrong team. They're not advocating for you. Working with a lender who doesn't know how to get you the best deal with down payment assistance. That's working with the wrong team. And there's a few things that are very, very important that you're going to miss out on if you're working with the wrong team. These mistakes we talked about, realtors and lenders are willing to make those mistakes because sometimes these mistakes don't even affect. If they sell the house, they sell the house. Okay. But Nancy will cover these real quick.
Yeah. So again, going back to it, home inspection. At the end of the day, escrow is the time to pretty much find out everything going on, because one misstep, one thing that we didn't look at can cost you thousands. And that is completely unexaggerated. And again, I've seen it in my time in the business, and I try to help people avoid it as much as possible. So home inspection, it's a couple $100. I promise you it will lift weight off your shoulders. Having a good realtor, I can sit and talk about myself all day long, but at the end of the day, service provides it. At the end of the day, you need people you can trust on your side. I am all about transparency. I put everything on the table and I let you guys know, hey, I love this house. I think it's so cute, but I love this house for you because it's financially what's best for you. And I let you guys decide. I'm always big on letting you guys know where it is because I always see it from an outside perspective. And I try to see it in different ways for you guys. So I'd love to be able to help in any way that I can. And I'd love to be your advocate.
Yeah. And then working with a big bank, instead of a direct mortgage broker such as myself, that can cost you tens of thousands of dollars. Now, maybe the tens of thousands of dollars aren't up front because they might give you a bad interest rate that over the course of the loan compounds and definitely will cost you tens of thousands of dollars if you get a bad interest rate. Different markups for different little side loan programs they have, these complicated contracts that they're not going to explain to you, various hidden fees in there, and huge overhead costs. Okay, they have to pay a lot of money to keep the electricity going and pay the secretaries and have all the sort of physical capital they have within these buildings. I don't have to pay those. My whole company is cloud-based. It is very low overhead, so we're able to offer the lowest rates. And also, if you go with the wrong team, they're not going to stress this point that you need pre-approval. You need to get approved for a loan before you start searching for homes. Because if you find that home you love, your kids are there, your wife's there, and like, this is it, this could be our home. And they start picturing themselves in it and doing this in the den and cooking here in the kitchen. Oh, this is perfect, honey. I can't believe this is the one. But you're not pre-approved. Guess what? The seller's going to look at it and they're going to say, whoa, I don't even know if these people have the money. Next offer, and they're going to look at the next offer. And then So you need to get approved before. So then the next one is a lender that knows the down payment assistance program, such as myself. I can save you a lot of money upfront costs. Like I said, the government wants people to own homes. It's part of the priorities of our government for people to own homes as opposed to giving their rent to a landlord, because it builds generational wealth, and that is good for the economy in the long run. Because if you need money 20, 30 years down the line and you've put money into your house this whole time, you can pull a little bit of that money back out through a cash out refinance or a home equity line of credit, and then use that money to go buy whatever you're going to buy, pay the local businesses, and it keeps money going in the economy. And you're more likely to spend that than a landlord who owns, 50 properties would. And so I'm aware of those programs. I advocate to get people those programs. Many people qualify, but many people don't use them. And so if you're working with me, I'm going to make sure you get whatever program comes to you. Especially if you're a veteran, I can definitely get you those programs too.
I think the gist of it, everyone, is just basically dependability. Again, you're going to have questions after dinner one day. You're going to need people that are going to be able to answer that call because you have that one question that didn't come to you until late that night. Dependability is key. Communication, you need people that are going to give you updates, not on just your loan, but also on what's going on with your offer, what's going on with escrow, how's escrow doing. Communication, dependability, and last but not least, people that are going to fight for you. At the end of the day, we're sweethearts and we're pretty nice people. I'd like to think we're nice people majority of the time on camera, but at the end of the day, when it's going to come down to it, we're going to fight for you. And most of the time, we come out on top. So food for thought, have people that are going to fight for you, get pre-approved first, and pick a really cool realtor.
And Nancy's great. She's a great realtor. You should definitely go with her. Even if you don't choose me, go with her. So here's the question. How do you feel now?
I feel cool. How do you guys feel?
Do you guys feel excited to get in your new home? Do you feel confident that you have the knowledge about the various loan programs to qualify you to get in that home and give you that down payment assistance to get that home? Do you feel informed from the information we've given you? Hopefully you do. If you are not excited, if you are not confident, if you are not informed at this point, we haven't done our job. If you are excited, if you are confident and informed, we have done our job. I hope I've done a good job at getting you guys in this position, in this emotional state right now where you are excited and confident, because you should be. Because like I said, lots of people can afford a home. Lots of people qualify for these programs. Not many people are taking advantage of it.
Yeah.
So now we're at the end of the presentation. You guys made it. All right. So Q&A time. Ask us anything. All right. And yes, you can unmute yourself right now. Let me change the settings so you can do so.
And guys, feel free to ask us any questions you have, whether it's real estate, whether it's loan side, just direct them to us. And in the event that we can't get to them tonight, you're going to have both our contact information. We're extremely accessible if we haven't made that clear already. So just feel free to reach out if we can't get to it tonight.
Yeah. And while people are unmuting themselves to ask questions, if you go click that link right there, pacifichomewebinars.com/book. That's when you make the appointment with me. We can get you started on the pre-approval process. Again, that's free one-on-one consultation to see where you're at financially. But if you got a question right now, you can go ahead and unmute yourself. You should be able to do that. Yes, you should be able to do that. And go ahead and ask a question. We got a question in the chat first. Go ahead. Nelly?
I'm not ready to start right now. Okay. Can I get information later?
Yeah, of course. Yeah, you definitely
Will you text me that information that you put up here so that I can do it from my phone?
Yes, we can. But go ahead and reply. You know how you've been receiving texts this whole time? Go ahead and reply in that. I think you already have from earlier. And then you'll get more information. That there should be an automatic text coming out there. But if you want to have a more deep conversation over text, just do that. And then feel free to sign up for the one-on-one consultation where you can have a conversation too. Okay. Cool. Thank you, Kelly. And we got one in the chat from Fallon I'd like to answer right now. Does bankruptcy have to be discharged before you can help us? Mine is discharged in August 2022. There's various programs where a bankruptcy at this point would not allow you to get a loan, but there's other programs where we can work with bankruptcy. So yes, there's 100% loan options, even if you have had a bankruptcy. But we just got to get creative. This is where someone like myself, being a broker, can go figure out the program for you. If you go to a big bank, you're not going to be able to qualify, and they're going to run you through the whole bureaucratic process and waste your time. So yes, that is possible. And if you set up an appointment, we can talk about that one-on-one. I'm sure you don't want to talk about everything right now with everybody here, but anyone else got a question? Go ahead.
You guys, if it helps, Sean is fairly fluent in Spanish. I understand Spanish, but I speak fluent Arabic. So if that helps, just let me know and be able to work it out.
Yeah.
Okay, it's Marlene, and I have a question. I need to know when we can stay one-to-one.
When we can have a one-on-one conversation?
Yes.
So I have a very, very open schedule, and you can see my whole schedule, at least see all the open times if you go to that link that's on the slide right now, and it's also inside the chat. Was just put inside the chat. And if you click on that link, it'll take you to a page where it's like a little calendar, and you choose the date. So you might choose Thursday or Friday or something like that. And then you get to choose the time that you want to talk to me. And you choose that time, and then you put in your name, your email, or any information asked. And then it creates a calendar event on my calendar, so I know it's there, and also create a calendar event on your calendar too, depending on what calendar you have. And then we will be able to talk at that time. So you choose the time, lots of availability, but to get to that, you got to click on that link right there.
Okay, and more one question.
Totally.
Nancy will be with us.
She can be on that call, yeah, if you'd like her to be on that call too, 100%.
Yeah.
Yeah.
Okay, great. Okay, so
yeah,
thank you.
Yeah. Thank you for asking.
Any other questions?
I had a question about the, I think it was a loan option that you mentioned for school employees.
Yes.
Do you have to be a full-time employee to qualify for that, or is that available for part-time employees as well?
I don't know about the part-time, full-time, but I can find that out relatively quickly.
Okay.
I do know that you don't need to be a teacher. You don't need to be a principal or vice principal. You could be any sort of secretary type position. You could be a custodian even if you work at that school and you work for the school district, basically. So I don't know about the part-time, full-time thing. I'd imagine there is various degrees that different loan programs qualify is how I would imagine it worked based off, my experience with the different programs. So I can find that out. Set up an appointment. Let's talk about it.
Okay, sounds good.
Okay, cool. Thank you, Jamie. Anyone else? All right. Well, if you don't have any more questions or questions that you don't want to, ask in front of everybody, I highly, highly recommend just click that link in the chat. That'll take you to the page where you set up a call with me, and Nancy can be there too if you so request that. That call is a one-on-one consultation. It's completely free. It's non-committal. Thank you, Tanisha. Hope to talk to you soon. Thank you for coming and staying. And then that call, 100% free, low risk. You're not going to have to do anything as far as getting your credit checked or anything like that. It's just a talk. So go ahead and sign up for that.
Guys, just to kind of get an idea of your situation, we've given a lot of general information today, and I think some of you are like, whew, it's kind of a lot. But I think maybe once you guys set up an appointment, and you're welcome to have a conversation with Sean on his own, or if you'd like me involved, I'm more than happy to step in. I think it's going to be great because then you're going to be putting everything into your situation. And that's pretty much that's pretty much what you guys are looking for. So it's free, no commitment, none of that. Just get educated. It's good stuff. Alrighty.
All right. Does anyone else have any other questions? Or is anyone having trouble signing up for a call and needs some guidance on how to do that?
We also answer life questions if they're not real estate or loan related.
Yeah. Any relationship issues? Anything. I used to teach relationship skills to at-risk youth. It was my job.
Like I need to ask one question.
Yeah.
I opened the appointment link, and like I'm living in Egypt, so the time I didn't know what is the time at your country or your home country in my home. Yeah.
Yeah, let's find that
So
out. Where in Egypt
I
are
need
you?
to. Sorry.
Where in Egypt are you?
Where?
Yeah. So your time zone, so I can find out the time.
Egypt. I'm living in Egypt.
Probably
Okay.
it's about like, let's say 18 hours.
So it's 5:05 a.m. there. So I would say
Yeah.
you guys are, you guys are 12, 10 hours ahead of us.
Okay.
7 hours ahead of us. If it's 5:05 a.m. there, is it 5:05 a.m.?
Yes. Yes.
Okay. So that means that you guys are, no.
Talk about dedication. I like it.
8:06, 8, 4, 5. Yeah, you guys are 9 hours ahead of us. So if you
Okay.
choose, so you're 9 hours ahead of us. So whatever you see, push forward on that list, push forward 9 hours, and that'll be the time for you.
Okay. Great.
So
Thank you.
Yeah, if you see 1:00 p.m. on there, that means it'll be 10:00 p.m. where you are at.
Yes. Okay. Thank you.
You're welcome. Thank you. Thank you for asking. Big commitment.
Thank you.
Appreciate you coming here.
If it's easier for you, Marlene, if it's easier for you because yours more is in the morning. So when you're closer to the morning, we're more in the evening. I'm sure we can accommodate that. So if it's too early for you, we can do it later as well.
Yeah,
Okay.
it could be 11:00 our
Thank
time,
you.
10:00 our time, PM. And so it's, in the morning, closer to the morning for you. Yeah.
Okay.
Alrighty.
Anybody else? Keisha, I haven't heard from you. You might have some questions. Jacqueline, Fallon. Tanisha, I still see you're still in here. You got any burning questions? Oh, so it sees, looks like the time zone might be automatic to your place or to your location, Marlon. It should say at the bottom left corner, I believe, where your time zone is. But either way, text me and we'll figure it out. Email me, we'll figure it out. We are connected on text, I believe.
Okay.
All right, Jacqueline, you got an appointment. Thank you so much. Yeah, and if you guys don't have any questions, just sign up for that call and we'll get things started. We'll get things rolling. You can talk with me. You can talk with Nancy too, if you so wish, and we can get you into the home that you're looking for and start building generational wealth. Hire your landlord. Put that money.
We're gonna put all of our information over to you guys as soon as this is over. I'm having trouble with my information getting stuck on there. So if you can't find me, just, I guess, Google me, or check me out on Zillow. I'm going to be on either. So either way, you're going to have contact to both of us. If you guys don't have questions now, we're available at any time. Alrighty.
Can we see this again and another? How do we see this again?
Watch this again.
Yes, how do we watch it again?
We'll be sending out the presentation a little bit after this, maybe a day or so.
Thank you.
Yeah, of course.
Just keep in mind, again, this is general information. So when you're going through it, if you have questions, give Sean a call or give me a call. So that way we can let you know which one is better for you, just in case.
And remember, no matter what, we're still connected on the texts. So if you need to text me, go ahead and do that.
Okay. All right, it's 8:10. I mean, I think we're winding down.
All right.
Last and final questions, guys. Real estate, loans. What are you gonna have for dinner? Should I break up with him?
Mindfulness meditation. What do you guys want to talk about?
Give us a call.